Hello, my name is Steve Bigelow with the Candlestick Forum. The market gave us a good impression or a good indication that there was a change of investor sentiment, and that was based upon seeing all the indecisive trading up here at a resistance line in the Dow. You could see how they were Doji hanging man type signals. Even today, when they brought it back up, it's still another hanging man up here in the overbought area. That's given us the indication that there's now some selling pressure coming in, that the bulls haven't been able to take it up, even though the bears knock it down, they bring it back up, but each day the bears are back there. This, without having a sell signal closing below the T line, still indicates that you should be taking more scrutiny towards your long positions to make sure they are staying above the T line. You had the added factor that over the last few weeks, you still had indecisive trading here in the Nasdaq, with finally a dark cloud gap down and now trading below the T line, with stochastics heading down. That does show a true change of investor sentiment that is more bearish. So you didn't have to see an actual sell signal to know that once you were up here in the overbought area and you started seeing potential sell signals, that the nature of the market was starting to change. That allows you to make logical trade positioning in your portfolio. For example, we've had some very strong profits in pattern breakouts like the fry pan bottom, as illustrated in our recommendation on CAN coming out of the fry pan bottom. When do you start taking profits? Well, this was your alert right here, that when you're in an overbought condition and they start gapping up, remember the Japanese rice traders tell us where do most people, or kind of profess to us, where do most people buy? They buy exuberantly at the top. With candlestick analysis, we can see when that exuberance is coming in a few factors. One, the gap up in the overbought condition. Two, you're starting to move that far away from the T line. And three, that's when the sell signals become much more poignant, that you want to be ready to take profits. Same scenario on our recommendation on Fin. Fry pan bottom breakout, they gapped it up. It's time to start taking that off the table, because where's your next likely target? Back to the T line. So the patterns have benefits. This fry pan bottom in MP is still working. Notice that the market was not very strong today, yet this one was still trading higher, actually using the T line as support. Gives you a high probability factor that you're still going to be in an uptrend. On the other hand, that same pattern, the fry pan bottom on a bearish mode, as we can see in Apple, is called a dumpling top. When was Apple's time to start shorting? When it started rolling over and they were closing below the T line. So what do we expect coming out of a dumpling top? Just like a fry pan bottom, a very strong price move, as you can see what's happening right now in Apple. So it's not very difficult to use the candlestick patterns, like in a reverse scoop pattern, where once they started closing below the T line, after you can see there was a failure right at this level, or a resistance level up here, that you could start going short once they closed it below the T line, creating a potential bearish scoop pattern, making the next logical target down here at the 200-day moving average. Again, this is not rocket science. This is just analyzing what happens in human nature and knowing what the results are of specific patterns. Our recommendation on going short on IMMR was based upon there was a sell signal. There was your close below the T line. If you shorted it on this day, or if you didn't short it on this day, the analysis was very simple. If it opened lower, what's our Doji rule? The price will usually move in the direction of how they open after a Doji. If they open it lower, what type of what type of sandwich? What type of signal are we likely to see? A bearish Doji sandwich, meaning this day right here and this day right here are going to be approximately the same. And what is our expectation after a doji sandwich? More in that same direction, or in this case, more downside. So the markets, once they started showing indecision up here, as a candlestick investor, you get a head start by recognizing the change of investor sentiment so that you can reposition your portfolio. Basically, start taking profits in long positions that are starting to show weakness and adding short positions to the portfolio. That doesn't necessarily mean all your long positions are closed. That means if any long positions are starting to show it's time to take profits, you take profits and establish some short positions. That'll be it. Our high-powered training session for this weekend, Saturday, is canceled because of all the lack of power out of Houston. Our staff didn't have their computers up to get everything ready, so we're just going to postpone it for a couple weeks. So with that, we'll see everybody in the chat rooms.